All right, good morning, everyone, and would like to welcome you to the 7th Annual Small Business Workshop. My name is Mark S. I'm the founder, president, and CEO of the Lee Group, which is an integrated strategic marketing and consulting firm here based in Metro Detroit. I'm also an adjunct professor at 3 different universities, a radio host, a blogger, and also a media contributor here across Detroit. And all the things I do are focused on entrepreneurship and small business development and its role in revitalizing Detroit. And thank you for joining us this morning for our 7th Annual Small Business Workshop. I am so pleased that you are able to join us for this workshop, which is in fact presented by Fifth Third Bank. And one of the things about Fifth Third Bank is that they have been with me since day one. And obviously, due to the pandemic, this is our 2nd year where we're offering this event. We're offering this event virtually. So we're trying to do the right thing. We know the numbers are improving, but we're still offering this workshop, this free workshop virtually. So this event is free, and without our sponsors, we would not be able to do that. And this would not be possible. So what I'd like to do is to welcome our presenting sponsor, Fifth Third Bank, to make a few comments. They've been with us since day one, and we appreciate all that they're doing in Detroit and for their support for the 7th Annual Small Business Workshop. And what I'd like to do is to invite Jason Paulatier. He's the Senior Vice President, the Market Manager for the North Region Community Development Area for Fifth Third Bank, for a few comments. Jason?
Good morning, Mark, and good morning, everyone. Can you hear me okay?
We can hear you.
Fantastic. Yeah, as Mark said, this is the 7th year of this workshop. And there is a reason that Fifth Third Bank has been the presenting sponsor every year since its inception. It's because we believe that small businesses are indeed the backbone of our economy and of our communities. And we want to make sure they have the tools to be successful. This year's theme, re-emerging from the abyss, couldn't come at a more opportune time, as it does feel a bit like we're seeing the light at the end of the pandemic tunnel. As we all know, small businesses have been hit exceptionally hard over the last 14 months, but we've also seen how resilient and creative they can be. Please know that Fifth Third is here for you, as are partners like the Detroit Development Fund, Michigan Women Forward, and Build Institute, who you will hear from today. I'm proud that Fifth Third sponsors this workshop and that we were able to provide some amazing speakers this year in Jeff Korzenik and Kala Gibson. I know that every time I've heard Jeff or Kala present, that I come away inspired and definitely learn something every single time. Thank you for joining today. I am confident you'll hear about great ways to start up, rebuild, or grow your business. And I hope to see everyone in person real soon and for sure next year. Back to you, Mark.
Jason Paulatier, thank you very much. Again, we thank Fifth Third. They have been a wonderful partner over the last several years, but we also have other sponsors that are engaged as well. I'd like to take this opportunity. They've been with me for a long time, with the Lee Group for a very long time as well. Our friends from Comcast Business. I'd like to welcome Ms. Renee Hendricks on behalf of Comcast Business to provide a few opening remarks as well. Renee?
Hello, can you guys hear me?
Yes, we can.
Good. I'm Renee, and I'm a local small business advocate for Comcast. I know this past year has been a challenging one for all of us. U.S. small businesses have been particularly hit hard by the COVID-19 pandemic, especially in Michigan. Here at Comcast, we believe in supporting and strengthening businesses who are the backbone of our local communities. Comcast has been helping small businesses with our RISE program. RISE stands for Representation, Investment, Strength, and Empowerment. It was created to invest in the success of small businesses that have been hit hard by the pandemic by providing valuable and practical support. Selected businesses could receive advertising and marketing consultations, production of a 30-second TV commercial, a media strategy consultation, a technology makeover, and/or a monetary grant. We are also offering free technology checkups. We understand the needs and challenges have changed for each business in the past year. A lot of businesses are requiring more bandwidth because of the increase in uploading and downloading they are doing. There are many different internet speeds for coax and fiber to fit your needs. Comcast Business also offers additional services, including security protection that helps protect your business from costly security breaches, smart video monitoring solution, so you can always stay connected to your business even when you aren't there, and a phone system that works great for remote workers and can connect all your employees in their homes or all of your locations together. I look forward to helping each and every one of you with your telecommunication needs for your business. Thank you.
Renee, I want to thank you very much, and we appreciate the support from Comcast Business. And that RISE program is doing some wonderful things. They just made a $1 million grant contribution for several businesses across the city of Detroit, as well as other cities across the country. Renee, we appreciate you. Thank you again very much. What I'd like to do as well is to remind you that this is being recorded. So this session is being recorded, and you'll be able to watch this at a later date via our friends from Detroit Public Television on their social media sites, amongst other media sites. A program like this would not be possible without the support of our sponsors and our partners. And therefore, let me just take a moment to recognize the following sponsors, and you do see them on the screen. We already acknowledged our presenting sponsor, Fifth Third Bank, our good friends from the Detroit Development Fund, Comcast Business, Build Institute. We also have many partners that have been engaged as well, including Michigan Women Forward, State Farm agent Cindy Fletcher, Tanner Friedman, a strategic communications organization out of Farmington Hills, and our good friends at WTVS, also known as Detroit Public Television, or Channel 56. And without these sponsors and partners, today's event would not be possible. I also want to thank the many members of the media. We've gotten great media coverage, including this morning. We are in the Detroit Free Press, online, and other forms of communication, so we thank them as well. But the objective of this workshop is very simple. It's to identify practical solutions as needed as businesses continue to recover. Our objective is to focus on reestablishing a strong foundation, strengthen the small business core with an eye on the future. Topics will hone in on economic projections, its impact on small businesses for the future and across Metro Detroit and beyond. With economic and business challenges stemming from COVID-19, this year's theme is reemerging from the abyss. Yes, reemerging from the abyss. I have been asked countless times, how do we come up with that title? Because we have been in the depths of despair with this COVID-19, and we're starting to see signs that we're beginning to reemerge from that abyss. So this series today will kick off with a 90-minute session. Subsequent weeks will be 60 minutes. This will be a 90-minute session featuring Fifth Third's chief economist, Mr. Jeff Korzenik, and he's going to give you an overview of the economy, its impact on our great city, our great state of Michigan, as well as across the country. Then we're going to have a fireside chat with my good friend, Mr. Gibson, also with Fifth Third. He's an executive vice president. He's from Detroit originally, still has very strong ties here. He's out of Cincinnati. He's a dear friend of mine. We have a fireside chat. And then we're going to have a great panel discussion that's focused on business recovery and sustainability. And on May 12th, May 19th, and the 26th, you will hear from business leaders, subject matter experts, and other entrepreneurs who will share their journey during these challenging times. And you will have the opportunity to ask questions and to be engaged. So I'm excited about this year's event. Today's event was actually sold out. We were getting more and more requests, but we have opportunities for the other events as well. I'm excited about this year's event because we have a great lineup of speakers, including panelists and workshop leaders. We want you to learn from this workshop and gain the experience and practical tools to help make you successful. So therefore, we're going to ask you to focus and share this event through social media. You can follow hashtag Small Business Workshop. That's Small Business Workshop. You can also follow me on Lee Group on Twitter @Lee Group. Please tweet out. We'll retweet you and also use the hashtag Small Business Workshop. Additionally, this event is being recorded, as I referenced earlier, will be available on Detroit Public Television's YouTube channel. Small businesses, before I turn over to our keynote speaker, are the engines of our economy and major sources of employment. They account for over 1.5 million jobs annually. It translates into another revenue opportunity for businesses and for cities because of tax revenue. But it's well documented that 17% of nationally, 17% of small businesses shut down within the first 3 minutes of the pandemic. And 41%, for example, amongst African-American businesses shut down permanently or partially within the first 3 months of the pandemic hitting. So this has been devastating, and that is the abyss. That is the abyss. And many businesses, small businesses, still struggle. And quite frankly, many more, quite frankly, will fail. But as you will hear in a second, economists are projecting a recovery. And that's the light at the end of the tunnel. We were in the abyss. Now we are at the light at the end of the tunnel. That's why this important. That's why this theme is important. Reemerging from the abyss. And that's why this workshop is important to you. And I applaud you for being here today. And the mission is quite simple: to provide practical advice and counsel for existing and aspiring small business owners experiencing growth challenges. At this point, what I'd like to do is to welcome our opening speaker, Mr. Jeff Korzenik, and he's the Chief Investment Strategy for Fifth Third Bank. He's a regular guest on CNBC, Bloomberg, and Fox Business News, and his writings on economics and public policy have appeared in numerous national and regional publications. And he was recently selected a member the Council on Criminal Justice for his work on the intersection of the justice system and the labor markets. And he also has a new book, Untapped Talent. Please welcome Mr. Jeff Korzenik. He's the Chief Investment Strategist for Fifth Third Bank. Jeff?
Thank you so much, everyone. Thanks for joining me. I'm just going to pop up a presentation on the screen. What would an economist be without some slides? But I know not everyone is a graph and chart person, but please bear with me because I think there's some important information included in this. We're calling this the Great Disruption because this has been a downturn unlike any other. In technical terms, the economy last peaked in February of 2020. Of course, fell into the abyss and then started recovering very, very gradually by about May. So in a sense, this was only a 2 or 3 month recession, but I think we all understand the implications of this time period, the way the economy was just completely shut down for a long period of time for many, many businesses, has a level of disruption that is much greater, that not only lasted beyond the few months of the actual technical downturn, but will be with us for many years and possibly many decades. Let me start out by talking a little bit about some of the good news, and that is that a little vaccination has gone a long way. Our belief at Fifth Third has always been that the recovery story really was primarily a second quarter of this year story, rather than something that is going to be delayed to the end of the year. It is true that it will likely take us to the end of the year to achieve some level of herd immunity and complete protection from this terrible disease. But the practical matter is that when we've gotten to the level of vaccinations that we are currently at, the deadliness of this disease is going away rapidly. Certainly for people who have been willing to get vaccinated, this is a near non-deadly disease, and that has allowed for a reopening of the economy. It's not going to wait till the Center for Disease Control sounds the all clear. People are getting out and about, businesses are reopening and hiring. So this is very much a second quarter story, but it is going to be different. I think that's really important to understand that we're not going back to the same economy we had prior to the pandemic. The pandemic has changed the trajectory of trends in the US. It's accelerated trends. It's been a supercharger of trends. And we think many of those changes will last well beyond the pandemic and well into recovery and the next expansion. Some of this, of course, has been fed by new policies. We'll talk briefly about fiscal policies and a little bit more on monetary policies because they have a lot of implications for business owners in this new post-pandemic economy. And we'll talk about some of the long-term challenges and opportunities. Let me start by just observing how we were able to start growing again from the bottom back in May of last year. It had a lot to do with the kind of fiscal stimulus we put into place, most notably the Paycheck Protection Program, as well as enhanced benefits for those who were unemployed, as well as a host of other things, debt collection moratoriums, rent eviction moratoriums, things like that help stabilize the economy. What's not always fully understood is just how massive these interventions were relative to our history of intervening in the economy. The way to look at this is how big were the fiscal interventions, the spending by the federal government relative to the overall size of the economy. We've really only seen two big episodes in US economic history. One was the response to the Great Depression, and for all we read about those programs like the Civilian Conservation Corps and the Works Progress Administration, those interventions relative to GDP added up to less than 6% of GDP. So very big by the time, unheard of at the time, but it has become dwarfed by the most recent interventions. 2008, 2009, 08, we were off to a slow start. 09, we really hit our groove with a large intervention. The combined interventions and fiscal stimulus was about 6.5% of average GDP. If we get a full package of President Biden's proposed infrastructure package, we could expect a total intervention, total fiscal stimulus, about 25% of GDP. Even if you assume as a practical matter that gets scaled back, we're probably still talking about a 20%-ish intervention and boost to the economy. That is clearly a multiple of anything we've tried in the past, and it has had results. But it's also left us in an unusual position with an awful lot of cash in the economy. This is money market fund assets, a form of cash for many people, but this is also reflected in bank deposits and other measures as well. This is simply easy data to illustrate the point. When you hit recessions like 08, 09, there tends to be a boost of money market fund assets, and then they go back into the economy, either invested or spent. But look at how high we got. This is on the right-hand side of this chart. We got up to about $4.8 trillion in money market fund assets. What does this tell us? Today, we're at about $4.5 trillion. This tells us that if history is any guide, this money is coming back into the economy, and it's an astoundingly high level. What would be a normal level? Well, if you look at the period on this chart from 2010 to the start of 2020, about $2.5 trillion or so would be considered normal for this kind of interest rate environment. So we believe that there is $2 trillion in cash coming back into the economy. Some will be invested, some will be spent. For those businesses that can capture this, this is going to be a tremendous opportunity and will continue to have positive repercussions into the economy. Now, some of the programs that have built up this cash are ending. So for instance, the augmented unemployment benefits will end. They're targeted to end in September. Some states are already ending those programs. But given the size of this cash buildup, we're not expecting things to fall apart when these programs end, not by any means. There's a lot of cash here. Some sort of infrastructure bill will also keep a level of stimulus going. So we don't see any major problems on the horizon from this front. But when the cash comes back into the economy, whether it's spent or whether it's invested, we're really going back into a different economy. And what we've seen during the pandemic is it has disrupted industries, geographies, and policies. And many of those disruptions will last. And I'll just give you a couple of samples to give you a flavor of this. Industries, I think the easiest way to see this is the spend from home trend, e-commerce. Now, e-commerce has been with us for many decades now. It has grown as a percentage of overall retail sales. So you can see this chart that illustrates it going back to 2000. That gradual rising line is the growth of e-commerce relative to overall retail sales. Incidentally, you'll see on some of these charts, these vertical gray shaded areas. Those are periods of recession. And you can see in the prior two recessions, the mild downturn in 2001 and then the very deep downturn in 2008, 09, it maybe stalled out e-commerce a little bit, but nothing really changed the trend. Take a look now on the far right-hand side, our current economic episode. You can see how, understandably, e-commerce spiked higher. And even now, as we are largely opening the US economy, people do want to go back to traditional shopping and traditional stores, but we're not going back all the way to where we were back before the pandemic. And in fact, our belief is that we will resume this uptrend in e-commerce and likely at a faster pace. One of the unusual things that happened during the pandemic was that many people adopted forms of e-commerce that they hadn't used before. Think home delivery of groceries, for instance, or they broke through barriers that were thought to exist in e-commerce. It was once thought that people would be very reluctant to buy furniture online, buy cars online. We've even seen multi-million-dollar homes bought online with the buyers only seeing videos of the properties. This is obviously unusual, but it speaks to the point that this trend is not only going to continue, it's going to continue at a faster pace. And we see this in many areas. We also think that there are geographic trends. One that's been much talked about and obviously is something very pertinent to Detroit is the possibility that people are moving from the urban core out to the suburbs. Of course, just Detroit has seen this in the past. It's a risk for downtown businesses in every large metropolitan area. It doesn't have to be disastrous. It creates opportunities in the suburbs as well. But it's something that I think businesses and particularly small business owners have to be aware of. Some of this is just the standard demographic patterns. When the baby boomers, that's my generation and perhaps many of your generation as well. When the baby boomers got to a certain age, those who had been living in the urban core, some of them moved to the suburbs, looking for different school systems, things like that. It's happening with the millennial generation as well. So the millennial generation, we don't have data city by city, but we have to watch very closely for cities like Detroit that have relied heavily on millennials to support downtown, some downtown retail businesses. Now, I don't think we're going back to troubled days, but this is an issue that has to be addressed or at least faced by business owners. The risk that not that people are moving away completely, but that there will be at least less inflow into the urban core and perhaps some outflow. There's no big generation to come in after the millennials. Birth rates, and we'll talk about this in another context later, birth rates peaked in this country in 1990. There was a Wall Street Journal article today. Birth rates were the lowest since the 1970s in the United States last year. So we do have some demographic challenges. One of the challenges that will present is to the urban core, which has typically attracted a lot of young people, as well as some renewed possibilities with immigrant populations. It's also true that the cities that are attracting businesses tend to be a different set of cities than prior to the pandemic. The really big cities, the Chicagos, New Yorks, Los Angeles, have had trouble attracting businesses because they've become in many ways too expensive and have priced out too many businesses and too many employees from those markets. The data you see here is from the Site Selectors Guild. This is site selection professionals who were surveyed by their organization and asked, where are you recommending businesses relocate or locate new facilities? The chart on the left shows the results of those surveys. It's really kind of stunning. Suburban areas are the big winners. Mid-sized urban areas, and that would, of course, include Detroit would be considered mid-sized within the city limits. Rural areas, that's something we haven't seen much interest in a long time. And then large urban areas, who would have been the winners just a few years ago, seem to be trailing. And if you see the types of mid-sized cities for new projects, it's not the list we would have seen as recently as 2 years ago. So those are some changes. We're also seeing movements from one state to another state. I will tell you that Ohio has been a beneficiary. Michigan is kind of in the middle of the pack. States like Illinois are clearly losers in some of these movements out of states, and the big winners have been in most of these surveys in the Southeast, plus Florida and Texas, as well as the Carolinas. So again, Michigan is not particularly badly positioned here, but this is something that is relevant to other adjacent states in the Midwest. What can we expect going forward from fiscal stimulus? We've seen this huge package, this huge inflow, and has really changed the nature of politics in the United States. For one, the pandemic disrupted the expectations for the election and the results of the election. It was widely anticipated that there would be a status quo election prior to the pandemic, at least. People expected Republicans would retain the White House and the Senate. And of course, that's not how it worked out. But the majorities in the Senate and surprisingly in the House of Representatives for the Democrats are quite narrow, but a majority is still a majority. It allows some room for movement. We'll probably get larger stimulus packages like the infrastructure package than we would have expected, but we'll also get larger tax increases than we otherwise would have expected. We believe that the negatives that are associated with taxes and more regulation that come with these political changes are going to be at least offset, and possibly more than offset, by larger stimulus packages, as well as friendlier trade relations with other countries. Taxes are going to be the topic of the day for the next couple of months. We don't believe there's going to be anything particularly disastrous. Yes, taxes will go up, particularly our higher earners, but we think some of the threatened provisions, such as long-term capital gains being taxed as income tax rates for high earners, probably won't survive the legislative process. And so what we'll likely end up with is something that higher taxes, yes, but not catastrophically so for business owners. And it will also be accompanied by stimulus and infrastructure spending packages that are probably end up benefiting businesses and business owners more than they are challenged by this, particularly in the small business community. Some of the multinationals may face more substantial tax burdens than they had before. We do think, though, that the big change, and the one that business owners and small business owners really have to think about, is the new monetary policy. And this is pretty obscure stuff, but is really important. Our Federal Reserve Bank, which sets short-term interest rates in the United States, has introduced last fall what they're calling the new monetary policy framework. And it's usually been interpreted, and this is correct, but only part of the story, that the Fed is going to keep interest rates lower for longer. They would like to let inflation creep back into the system. They aren't going to act as they traditionally would have in raising interest rates if we get inflation. They'll let it set in for a little bit before they start raising interest rates. But there's another part to this, and this is the Fed's commitment to what they are calling broad-based and inclusive employment. And this is an intentional policy of keeping interest rates low in order to get very tight labor markets. And tight labor markets can be a blessing in that for workers, in that they tend to raise wages, and can be a curse for employers in that they can increase compensation costs or make it harder to find workers. And this is the primary challenge that we think will be around for many business owners and business executives in the next couple of years, and possibly beyond. The Fed has famously been said to be the person who takes away the punch bowl just as the party's getting started. This new Fed is going to not only leave the punch bowl on the table, I think they're going to spike the punch. What does that mean? What does that look like? Well, the chart you see before you is the ratio of job seekers to job openings. And if you look down towards the right-hand side before the spike of the pandemic, you'll see that this ratio was below 1. That means there were more job openings than job seekers. That means a red-hot, tight labor market. We think the Fed wants to go back to that. We're already starting to see some signs of this. This is a front page articles from the Wall Street Journal. A while ago, it talked about the article on the right, the virus lockdowns, talked about how we lost some jobs in December of last year. And then in the same front page of the paper, the article to the left talked about the shortage of workers for manufacturing. So this is already starting. You're hearing more and more, particularly restaurant industry, and many small businesses are simply having trouble hiring workers. And this is going to be an ongoing challenge. Minimum wage in some cities rising means some workers with limited skill set will get priced out. Again, it may mean for small businesses, they have to pay more for employees than they otherwise would have. We're worried about skills mismatches, right? Again, we go back, this is the great disruption. So if a department store job goes away and there's a new job created at an Amazon distribution warehouse, this is pretty typical, the patterns we're seeing. In theory, no problem. One job gone, one new job created. The problem is the persons who had that department store job may not be the right fit or the right geography for the new Amazon warehouse job. And this goes on across the economy. We're also worried about too many people have stayed unemployed too long. People who lost their job in the early months of the pandemic, March or April, who have not regained a job, are now officially long-term unemployed. That's 6 months or more. And we know from past history, once you hit that long-term unemployment mark, it's really hard to regain employment. We've struggled with female labor force participation, women who dropped out of the labor force, primarily women, some men, but primarily women, to watch children who couldn't go physically to school. You needed home supervision. That seems to be fixing itself as schools work over. But the big demographic challenge remains. And one way of looking at that is the chart below. This is the fertility rate in the United States. How many births per woman in the US? You need 2.1 births just to maintain your population and to maintain your workforce, everything else being equal. You have to replace the mother and the father, that's 2, and then there's a small allowance, that 0.1, for infant and early mortality. Where are we in the United States? We're below 1.8. We're not even replacing our population. The only way we are growing our population is with the addition of immigrants in the US. So this is a long-term challenge for businesses. It speaks to tighter labor markets than we've seen before, and the Fed is going to keep aiding and abetting that, which means higher compensation costs and more challenges in finding workers. Now, there's a silver lining here, and that is if the business community responds through workforce development initiatives, and we believe this is happening. This is an opportunity, particularly cities like Detroit, where you have too many people who've been sidelined and marginalized from the labor force, or have not been given the training to allow them to participate as fully as they could in the economy. As Mike mentioned, I have a book out that talks about bringing people with criminal records back in the workforce. That's just one aspect of this. We think there's a real opportunity here to grow the prosperity of regions if the business community leads, but a challenge nonetheless. One last point that's relative to Michigan, we do see another opportunity coming in manufacturing jobs coming back to the US. We think that is on its way. There's bipartisan agreement. The shortage you may have heard in semiconductor chips and all the disruptions of the pandemic have a renewed focus. The chart you see talks about cost comparisons to the US. The big export countries, the places we used to send jobs to, just aren't that cheap anymore. Even China is only about 5% cheaper than the US. There are cheap countries out there, but they're pretty small economies relative to the US. It's not back to 1940. Half of jobs were in manufacturing, but it does mean the U.S. can gain some of these jobs if we're ready. This is critical to the health of Michigan, which relies heavily on manufacturing. We think this is pretty good news for the Michigan economy and for the Detroit area ultimately. One last slide, and that's just some perspective, the long view here. This is a slide that goes back to 1948. Again, those vertical gray areas are the periods of recession. The blue dips you see are how much you lose in GDP. How much do we lose in economic activity during those recessions? And the one on the right is the most severe since 1948, a 10% decline in GDP. But look at what happens in the periods between recessions. Those green mountains are the additions to GDP. It's how much we grow as an economy in between those setbacks. We should view this period of an abyss, this great disruption, as a reset for an economy. Very, very painful, no doubt. But as we climb out of it, these resets allow the economy to grow again. They create new opportunities, they free up labor, they free up industrial capacity. And we expect that this is the start of a long multi-year expansion that will provide opportunities for many, many small businesses in the Detroit area and throughout the state of Michigan. With that, I'll turn it back over to Mark. Thank you very much. And I appreciate the time. I'll come back on and be available for questions later. Thank you, Mark.
Jeff, thank you very much for that presentation. We appreciate it. He will be coming back later to answer some of the questions as well. Very important conversation that we understand what's happening in the economy. And now what we're going to do is a segue and have a fireside chat in the morning. It's a little bit cool out there this morning. I had to turn my heat back on last night. So we're going to have a fireside chat with my good friend, Mr. Gibson. And Kala is the Executive Vice President, Head of Business Banking, the Chief Enterprise Corporate Responsibility Officer for Fifth Third Bank. And we're going to really spend some time focusing on this year's theme, which is reemerging from the abyss. And I'm proud to say that Kala is a dear friend of mine, but he's also from the great city of Detroit and is now doing some great things in Cincinnati. And Kala, good morning, and thank you very much for joining me.
Hey, good morning, Mark, for having me. Happy Small Business Week to all the small businesses that's on the call. This is the Super Bowl week for my team. We get excited about this week. We know it's a 12-month sport, so we just don't celebrate and work this week, but this is a combination of all the work that we do during the year to bring awareness to small businesses and the importance of small businesses to the economy in our community. So
let's jump right into the conversation. And I have to give a little personal shout out to Kala. He's also a fraternity brother of mine too. Is that right, Kala?
Yes.
All right, let's just jump right into it. It's been over a year since COVID hit. From your perspective, Kala, how are small businesses grappling with the challenges today versus then? And what do you still see as the most significant challenges today?
Yeah, no, this is a great topic. And again, thank you to Jeff for his very understandable information as it relates to the economy, because I think it kind of tees up our conversation really well. So when you talk about the abyss, you're right. You know, about a year ago is where we saw everything really start to come to a halt, and we saw a significant amount of small businesses close. You know, there's different stats out there, but 25% of small businesses closed and probably will never open. And then it's even worse when you think about minority and women-owned businesses, where you have doing things from 30 to 40% that'll never open again or close. So the challenge we have right now is, how do we regenerate? How do we bring those businesses back? PPP, you know, Jeff talked about that, part of the stimulus program, you know, help keep some of those businesses afloat. But we know there were some challenges, particularly in round one, of those resources getting to small businesses, minority and women-owned businesses. But the second round, I think that was somewhat solved. But the challenge has been that a lot of those businesses are closed now, right? Yeah. So the only way you can get a PPP is you have to actually be in business. Yeah. So it's going to require everyone, the government, different foundations, resource groups, to figure out how do we come together to be able to regenerate these businesses so they can take advantage of the opportunities that Jeff just outlined.
You know, I've been spending a lot of time. I came up with this title this year called Reemerging from the Abyss. And a lot of people have asked me, Mark, what does that mean to you? But I want to do is to turn that question over to you and ask you, Kala Gibson, what does reemerging from the abyss mean to you? And what does this phraseology mean for businesses as well?
Yeah, and again, it's back to this regeneration idea, and you know, how do we come back from such a devastating pandemic? We know when you think about small businesses, particularly in the retail sector, you know, those businesses were hurt, but there's some positive news to that, which is what Jeff mentioned around e-commerce, because a lot of businesses had the opportunity to reinvent themselves and pivot. And we've seen this trend with e-commerce, to be honest. When we've seen this trend for a while, then Jeff had but it wasn't moving fast enough. And I think that this last year is going to accelerate that. And it's going to accelerate it for a couple of reasons, for the good. Consumer behaviors have changed significantly. Again, they were already changing, but the pandemic accelerated that. Again, people are willing to buy sight unseen. Folks aren't necessarily leaving their house. And then the other piece that Jeff talked about that people are missing is this kind of urban flight, right? That people are moving out of the cities. And, you know, a lot of our small businesses are in our urban core, particularly our business districts. So I think re-emerging from the abyss is going to require us to have a paradigm shift for how we do business, right? As small business owners, as it relates to e-commerce, but then also as an ecosystem, and I'll talk a little bit about that later. How do we build up our business districts, right? Because even if people move out of the urban core, if you have business districts in the city that are destination locations, right, people are going to come. That's what happens with downtown locations, right? And the idea is, how do you continue to plow money in there? Detroit actually has one of the best models in the country with the Detroit Strategic Neighborhood Fund. I mean, that's a model that I'm seeing across the country, but Detroit, as usual, is leading the charge with that very innovative solution.
Outstanding. You know, we heard Jeff talk about the economy, a very excellent presentation, very clear, very articulate. We hear that the economy is beginning to recover. We're starting to see that, of course, and you can start to feel it as well. But what advice would you give to entrepreneurs who are not sure what they should be focused on at this point in time as the economy continues to recover? So they spent the last few months in that abyss, kind of hibernating, so to speak, doing things behind the scenes. But now that we can feel that momentum increasing slightly, what advice would you give these entrepreneurs who are not exactly sure what they should be doing at this point?
The most important thing that I've talked to small businesses about, I went to my daily coffee house this morning and had a conversation with the owner. And the idea was being resilient, right? First and foremost, being resilient. Don't give up, stick with your dream, because that's the biggest thing that we're seeing, that some business owners are like, you know, they're throwing in the towel because, again, to your point, they don't know which way to go. So the first thing I'll say is stay to the course, be resilient, persevere. Now, again, it's going to require some help. And, you know, one of the places you can get that help, obviously I'm biased because I work at Fifth Third Bank, but I would tell you that you can go to any bank, any banker, and start to develop that relationship. And why this is important is because it's not just about access to capital, it's about access to resources, right? One of the biggest challenges we have as small business owners is that we don't know where to go, right? So if you have a banker, they can direct you to the SBDC, right? Places where you can get training, or even the Detroit Biz Grid, which actually has a list of resources that allows folks to be able to go and get some coaching and get those answers. And then even a list of CDFIs and programs that's out there that's around funding, like the Entrepreneur of Color Fund that, you know, Fifth Third is partnered with JP Morgan Chase to do that. So again, when it comes to this type of field, it takes a village. It's not just one bank trying to do this, but it's the idea of getting access to that information. And it's free. It's free. You don't pay for that, right? So you build a relationship. They can also share some best practices with you because, again, if you're banking a significant amount of small businesses, you can share some of the things that we're seeing out there. E-commerce, collaboration. We're seeing a lot of collaboration between small businesses where they're like, hey, you know, I have a gap here. You have a way to fill that gap. I can help you. And they're coming together. But that only works if you have a connector. And banks are great partners to be connectors.
So I'm hearing you say, really, you want to have that relationship with a banker or trusted advisor, so to speak. It's okay to begin to think about collaborating with other entrepreneurs and other businesses that might be of similar ilk, so to speak. So it begs the question too, as we think about those resources out there. I heard Jason Pollitt here the other day. He and I were chatting, and we were talking about the PPP. And I know that's one of the resources that certainly the bank offers, and we'll come back to that. But he gave me he gave the audience an interesting statistic, talking about the number of PPP loans a year ago that were granted. You know, everybody was kind of arms up in the air, everybody was confused, the system was put in place. But then he also referenced that the number of PPPs are actually down this year. Can you talk about that from your perspective?
Yeah, so Fifth Third was one of the largest PPP providers. We lent about $7.1 billion. The great thing about that program is that those are forgivable loans, so they're like grants. I think a lot of small businesses, the last thing they need is debt. They need some type of patient capital or some money that can come in and assist and then come back out. But interesting, he's right. The PP numbers were down. One of the reasons they were down was because there's less businesses, right? There's less businesses out there. So that's one. The second thing, which is interesting, is that in the first round, if you had a banking relationship, which is a big if, right? Because we found out that a lot of people didn't have those relationships. But it was a lot more complex the second time around. It was harder, right? And small businesses, you know, we just don't have those type of resources to be able to provide all the information that people were looking for in the second round. Yeah. So that's back to, you know, folks just gave up and said, I'm good, right? It's just too much effort. I got to run my business. I don't have a lot of time to do that. So that's why, again, you know, one of the things that Jeff mentioned was these supercharged trends that are occurring because of what's happened with the pandemic. And it's the idea of how do you create investment funds for small businesses, right? So funds that banks and foundations can invest in that allows small businesses to get money out to either restart their business or scale their business, but it's patient capital again, right? And it's the idea that it can be in the form of grants or if it is some type of equity, but something that the businesses can use to start it that's simple, straightforward, doesn't require a significant amount of paperwork or a story you got to tell, right? You have a business, you have a need, we're trying to get our economy back, and these are different ways we can do that.
And so certainly, it's my understanding, please correct me if I'm wrong, the PPP is still out there. Is it out there until the end of May? When is the last date before the program expires?
Yeah, so this is breaking news.
Breaking news.
Yeah, PPP actually ran out of money. The money is done except for CDFIs and minority deposit institutions. So if you're looking for PPP and you have yet to actually apply, you have to go to a CDFI or MDI because there's still some funds left for those institutions. But yeah, they announced that abruptly the program has come to a halt.
Just like that. That's news to me.
Yeah, well, I mean, and that's actually good news because you're right. The program was going to go to May 31st. As Jason mentioned, it was a slowdown initially with the funds for this round. They made some changes, particularly for independent contractors, right? Because again, they're being left out. And the majority of our small businesses are independent contractors, right? So it was like, how did they get left out, right? Those are the folks who really are driving this thing. Right. But some rules, they came back in and the money started to go a little faster. So we knew about a week ago that eventually this money would start to run out, that it wasn't going to make it to May 31st. We were hoping that there would be a warning signal. The warning signal was, yes, we're out of money. And additional funds you need to go to the NDIs and CDFIs. So,
and just a point of clarification, I'm sensitive to your time because I know you have a hard stop shortly, but can you just clarify for those who may not be aware, what is a CDFI?
Yeah, so Community Financial Development Institution, and then MDI, so is a minority deposit institution. So a Black-owned bank, First Independence in Detroit is a perfect example of that.
Just a couple other quick questions for you. You mentioned some Fifth Third resources. What else is out there from a Fifth Third perspective, resources that are available to small businesses?
Yeah, so I mentioned a couple with the Detroit Biz Grid, obviously the CDFI list that's out there, then the SBDC. I've asked Jason Politier, who's our leader in Detroit, to put something out there in the chat because I know it's going to be hard. People are trying to write down what I just said. Yes. That's not probably helpful. So he's going to include that in the chat if it's not already out there. But I think the approach is this, Mark, is that, you know, financial institutions, it's our responsibility to help actually feed the ecosystem. Like we can't do this alone. Our goal is to make sure that we're providing, obviously, advice, as I mentioned earlier, in lending. But for the most part, how do we fund this ecosystem that exists out there? So again, the CDFIs, the strategic fund that you have in Detroit, and other creative ways to be able to scale, right? We'll put in 5 million, and these institutions can make that 5 million into 25 million. You can see how this thing has a multiplier effect.
Absolutely.
So our number one goal, and quite frankly, is the number one goal of the entire financial industry.
And I see what, just for those of you tuning in, Jason did drop something in the chat room. Number 2, just to reemphasize, in case you're missing something, this session is being recorded. It is being recorded. It will be made available. So whatever Kala's sharing with you, the other speakers and panelists today, please feel free to go back, and you can scroll ahead, go back, forward, whatever, to get the information that you need. So as we think about the future, Kala, and the last question for you before we let you go is probably the question that everybody wants to know. How are you feeling about business post-COVID for entrepreneurship, for small businesses? Are you cautiously optimistic? Are you bullish? Are you pessimistic? Are you concerned? I get asked that question a ton, but I want to turn it over to you as the Executive Vice President from Fifth Third Bank. Share with us, what is your perspective for the outlook for entrepreneurship based on the economy?
Yeah, no, I'm very bullish on small businesses right now. As Jeff mentioned, there's a significant amount of stimulus that's been plugged into our country. You can see how the chart, his last chart was a very interesting chart, because that's the chart that shows the growth that we're going to see, right? And the amount of money that has been put into the economy, again, it's nowhere near the previous recessions or depressions that we've had, right? So when you see that much stimulus and all of the learning lessons from the pandemic, right? Because we're all coming out of this stronger and better. I actually see a significant amount of growth for our small business sectors. I think the key is going to be, though, that we have to think about the do different, right? And we have to take those lessons that was learned from the pandemic. And again, the biggest one is around e-commerce.
Yes.
That's where we're going. You have to make your investments there. Folks are still trying to build brick and mortar. If I had a choice, go e-commerce. You can do both, that's great, but if there's only one you can do, you have to go the e-commerce route. And then you also have to make sure that you're staying connected. You got to stay connected, because this money's going to pour in, and it's starting to pour in now, and it's going to pour in fast. There's going to be these programs that the city is offering, the county's offering, and it's going to go fast. So, get a banker, continue to come to these sessions with Mark Lee, information. But yeah, you have to stay connected to make sure you're getting that capital that's coming in.
Mr. Clark Gibson, I want to thank you very much. Executive Vice President, Head of Business Banking, the Chief Enterprise Corporate Responsibility Officer for Fifth Third Bank. I appreciate you. You are the best. And we miss you here in the Motor City, but we know that we're never too far from you, Clark.
Never too far.
Thank you.
I wear Detroit on my shoulder.
As we all do. We appreciate you. Thank you very much for your time. We know you're busy, so have a great day. Thank you.
Thank you.
My pleasure. What we're going to do is to segue to a panel discussion. Now, you see, I see people are literally dropping their information in the chat room for resources. That's the beauty of this workshop. So feel free to scan that chat room for websites and information. If you need more information, the information is out there, the data is out there, the resources are out there. And I would encourage you to go ahead and check the links in the chat room. We've assembled a great panel for this morning's discussion. But before I do proceed, I want to pause again. Again, please, hashtag small business workshop, small business workshop. Feel free to leave your comments. We want more people to see this session through social media. And you can tag me, Lee Group, that's it, on Twitter, Lee, L-E-E Group on Twitter. And I promise you I'll respond and I will retweet you as well. All right, we've assembled a great panel for this morning's discussion. And the question that's going to be addressed is reemerging from the abyss. And what does that mean? What does that mean to the panel? And we're going to have a thoughtful conversation for a few moments. At the end of the discussion, we have a Q&A. Jeff's going to come back on. So continue to drop your questions if you have any to the Q&A or in the chat room. All right, first one, I'm so So pleased to welcome my good friend, as everybody seems to be, Mr. Ray Waters. Ray is the president of the Detroit Development Fund. I always tease and call Ray the mayor of Detroit's entrepreneurial community for all that he's done. DDF provides growth capital to businesses in Detroit and provides financing packages for Detroit developers working on affordable housing projects and commercial projects in the city as well. And it also focused on developing and providing resources for Detroit neighborhoods. DDF also provides a line of credit for smaller contractors in the city, allowing them to undertake new construction jobs. Our next panelist, I'm pleased to welcome Ms. Alexis Dishman, and she is with the Michigan Women Forward, and she's the Chief Lending Officer. And she has over 20 years of both of corporate and nonprofit experience, and is the Chief Lending Officer, as I referenced, at Michigan Women Forward. And in that role, she is responsible for managing all aspects of the lending function, including community development, financial institution, which is that CDFI that we talked about, collab, the application for certification, expanding the technical assistance program for borrowers, and management of the lending team, as well as managing organizational risk and leading the expansion of the loan fund from 200 loans to over 1,500 over the next 3 years. And last but not least, I'd like to welcome Ms. Regina Ann Campbell. And Regina Ann Campbell is the president and CEO of Build Institute and is a wonderful supporter of Detroit. She'd like to welcome her back to Detroit. She was most recently in Memphis, but she is a Detroit native. She's the president and CEO of Build Institute, which is a nonprofit ideal incubator for the Detroit region. And before joining Build Institute, Regina was the chief program officer for Epicenter Memphis and was responsible for national strategic partnerships and portfolio programs, initiatives, and systems that ensure the inclusive access of vibrancy of the entrepreneurial community in the greater Memphis region. And as I referenced, that she is from Detroit originally. I'd like to welcome our panelists. Thank you all for joining me. If you can, please unmute yourself, and we'll go ahead and get started with the conversation. So what I'd like to do is each one of you, so I'm going to give you 2 minutes to address a very simple question. And the question is really twofold. You have 2 minutes to respond, and we'll carry on the conversation. And Ray, we'll start with you. What does reemerging from the abyss mean to you? And what does this mean for businesses? Ray Waters.
Thank you, Mark. Regina, good to see you again. And Alexis, nice to see you. We are DDF, as Mark had mentioned, and the question was asked before. We are a CDFI, a Certified Development Financial Institution. And what we have found in the last year for us is we're spending most of our time working with our current loan customers, Mark, trying to get them through the process and helping them navigate this uncertain water. But I think Kayla said it pretty well early. It's learning how to regenerate yourself and your business. And many of the businesses in our portfolio are retail and restaurants. And with the help of many of our collaborative partners, they've been able to regenerate how they do their business. Yum Village is a great example here in town, who is now doing 90% takeout and 90% order because they were able to find a collaborative partner of ours to show them how to do that. But we think that's what it is. The second piece that I think is most important, and Regina and Alexis can talk about this, and that's knowing where to go. So many small businesses don't know where the resources are, and there are tons of them here in the city of Detroit. I mean, the city of Detroit with the DEGC, the work that Build Institute does, Tech Town, lots of opportunities that small businesses haven't been aware of, I think, previously. Mm-hmm. We have a website that was created by the DEGC and supported by all of our panelists, and that's Detroit Means Business. And that can tell businesses where to go to find help. How do you put your PP application together so that you don't have to do it all on your own? But that's what we're seeing. We're seeing a slow reemergence from our loan customers. We've lost a few, but our job as a CDFI is to provide access to capital for those companies that aren't yet ready for banks. And it's not that banks don't want to do that. They are highly regulated. And so banks like Fifth Third have supported our work in the Entrepreneur of Color Fund here in Detroit. We will now, at the end of this week, have closed $11 million to entrepreneurs of color companies here in the city. And 67% have been entrepreneurs of color companies owned by women. But it's that access to capital, the emergency grants, and companies need to be aware of that the MEDC has programs. And how do you find that out? And you can find out from Build and from Michigan Women Forward and our group and others that we collaborate with.
Outstanding. I'm going to segue over to Regina Ann Campbell. And first of all, Regina, unmute yourself, please. I'd like to welcome you back to Detroit. And I recently wrote a story about Regina in Crane, so feel free to Google my name or her name, and you can get a sense for what she's doing. So I'd like to welcome you back to Detroit as the president of Build Institute. Similar question, 2 minutes. What does reemergence from the abyss mean to you, and what does it mean for businesses, Regina?
Firstly, thank you, Marcus Lee, for having me on this panel. Every year since the first beginning, this has been a great resource for community. So Build Institute is glad to be a partner in this effort. Ray Waters, he said it best about there being organizations that are available here and ready to support in areas that our entrepreneurs need since the pandemic. And so for us as Build, we think about this reemerging from the abyss as learn, earn, and return. And so in our suite of services for entrepreneurs, we have a variety of classes that help them decide to come in and pivot their business, take a look at the customer, because the consumer behavior has changed. And so we have a class called Rebuild that supports in that. And so our efforts in this is to work with collaborative partners, as Ray said, to support these entrepreneurs who have had some challenges due to not being on e-commerce, and that's been said a lot. So our organization is helping partner with others to make sure that our businesses who have been brick and mortar are also doing carry out, but also have access to e-commerce and different platforms. And through the Comcast Rise, us being a recipient grantee of that, we were able to help a number of our businesses with that. So ultimately for us, the reemerging is really about helping these businesses relearn, retool, so that they can begin to continue to have businesses and help create jobs. One of the things that I wanted to add to this collaborative partnerships that we now have a Detroit, Metro Detroit Region Black Alliance organization that's led by Charity Dean that also helps encompass some support to our small businesses in the community as well. And so whereas we're great at education, that's what we're known for, but we partner with folks like Ray Waters and others to help with the CDFIs and Capital Lens. And so thank you for having us. Reach to us at www.buildinstitute.org, hello@Build Institute, and we are happy to help connect you to the right resource, right time.
Gina Campbell, thank you very much. And I did have the opportunity of interviewing Charity Dean on my radio show, so feel free to check out. We had a 25-minute conversation. Google her name and listen to the interview on my radio show, from my radio show. Alexis, last but not least, 2 minutes.
Good morning, and thank you so much for having me here today. I'm happy to be here with this esteemed panel and fortunate to have these colleagues working with me to support the ecosystem. You know, it has been certainly a challenging time for entrepreneurs, particularly micro enterprises. And when I think about the things that, as I've talked to the entrepreneurs that we work with, when I think about the things that they've discussed, we've learned from talking to them and trying to understand what their needs are and how we can be most helpful. I think one of the major things that micro enterprises can do is really be thoughtful about what it takes to reach their customers and what they need in order to meet their customers' needs. And when I think about that, and I'm talking about that, I'm thinking about, you know, how are they reaching their customers? Is it through the digital divide, or is it through opportunities like Ray mentioned in partnering and understanding how to facilitate delivery of services and products? Or is it how to drive internet traffic to your website, or how to make your website more user-friendly such that people are able to use it? That's one factor in reaching customers. The next is, do you have the appropriate or proper staffing? With the changes in the economy and the impact that it's had, with children having to be at home and people not necessarily being comfortable in the workplace, it's become even more difficult to recruit staff members. So what does that look like in terms of the people that you have working with you, working for you in your business, and how can you best make the situation most appealing to them, whether or not it's pay increases or, it's other things that you can make more flexible so that the opportunity for them to work with you seems to be something that they want to do. So HR strategies is another major factor that entrepreneurs are trying to figure out and work through as they're reemerging from the abyss. And then understanding what capital needs you have. One of the things that we learned is we were trying to work with entrepreneurs as they were facing one of the most challenging times that I think we've all seen, was just how to figure out what they actually needed in order to survive. So do you have systems in place to support your business? Do you have proper understanding of the ins and outs of your cash coming into the business and leaving your business? And do you understand what it takes to move forward under these new circumstances? What kind of revenue generation you need in order to move forward, or what expenses are absolutely necessary, or some things that you may need to cut. We learned that many of the businesses that we worked with didn't necessarily have that information, but we recognize that we need to help them with that. So through some of our innovative technical assistance programming, we're working to ensure that entrepreneurs have the tools that they need in order to be fiscally responsible.
We have heard, and I mentioned this question to Kala, he addressed, but I want to get the panel's perspective briefly. We've heard about the dire straits. I mentioned 17% and 41% of all businesses going out of business, and African-American businesses respectively. But we also heard the numbers have increased up to 25% and even 50% nationally for all businesses and African-American businesses specifically. Whoever wants to take the question first, Regina, I'll turn over to you. I'll get to you first, Regina. So again, the question is, then what should businesses be doing? They hear those statistics, they're nervous, they're concerned. They have a business. What should they be doing right now in order to reemerge from this abyss and hopefully leverage this economic growth that's on the horizon?
Right now, for us at Build, we recommend that they start with a customer. We all know that if you don't have a customer, you don't have a business. And so we intentionally have a rebuild class for existing businesses to be able to take time to go in and evaluate their new customer needs and how do they get to what Alexis mentioned, sort of being able to get their product to customer in new and different ways. And so I encourage everybody to take the time and evaluate their customer. Consumer behavior has changed. People aren't as comfortable about going in brick and mortar anymore. So how do you retain and attract new customers? This means doing surveys. This means asking questions of your existing customers, whether you do it by phone or by email. But again, the first step to make sure that you have a path to continue business is you have to research and do some more customer discovery.
Ray, let me come over to you for that question. And Alexis, I have another question for you, but Ray, go right ahead.
Yeah, I completely agree. I think it's understanding your customer and then understanding how you're going to build a new customer base. The second part of that I think is really important is for small businesses to work with the resources we've talked about so they're aware of perhaps additional capital available to them. The MEDC and the state received $76 million from the federal government that over the next 6 months they're going to be putting into help for small businesses. And we need, as groups that help small businesses, to make them aware of where that is. There have been emergency grants out there and still are available to businesses that they can use. We've had the fortunate capability of getting grants from, well, Fifth Third, for example, where we were able to give some of our small customers a grant to pay the rent so they wouldn't be evicted. And those are the opportunities that are out there. You just have to find them. And Build Institute and Michigan Women's Forward and DDF and TechTown and others, and as I said, Detroit Meets Business, kind of put those resources in front of people, but they're still there and they need to be found. And it's hard work, but if you find $5,000 to $10,000 in a grant, it's good work. But I go back to what Regina said, and that's how do you change your business? Meet the customer needs that you see going forward. I'll give you a quick example of a company that we started to help 4 years ago when they came to our office, Melissa Butler at the Lip Bar. Started with a lipstick truck, then got our product into into Target and then Walmart, but she's really moved to online business. 90% of what she does now is online. And she's had very big success because she knows who her customers are. And so I totally agree with Regina. That's part of the process.
Yeah. And Alexis, I want to give you a chance to respond to that question as well, but then I have another question I'm going to lead you with once you finish your response.
Sure. I think they've really said it all, just in terms of the response. And I kind of shared some of that, with you initially, just in terms of the response that's required, for businesses. Just continuing to pivot and being thoughtful in your approach. I think Regina, when she talked about, the customer, because at the end of the day, it's reaching the customer, because that's where the sale comes. And that's when you think about sustainability, but just really trying to figure out how to be sustainable.
So the reason I want to stay with you, this next question is pertaining specifically towards women. We'll give everybody else a chance to respond. There was an article that was published recently. It's been a lot of discussion that a lot of people have left the workforce and a lot of women have left the workforce. And this has created this economic divide. So the pandemic has created an economic divide, if you will, when it comes to entrepreneurship and women businesses. So you're with Michigan Women Forward, you work with women every single day, as we all do from a business standpoint. But let's talk about those challenges afforded women business owners and how has the pandemic impacted their careers and their ability to start a business and create a sustainable business as well.
Sure. So according to the Center for American Progress, if 5% of women permanently drop out of the workforce, the impact is lost income of about $6.4 billion for families. So, I mean, that right there is telling. And what has been the impact for women as a result of the pandemic is the loss of jobs. 5 million women lost their jobs in 2020. So, but what that means is, and what I've seen is, that means there's also opportunity. Okay. So what we have also seen is that women are now looking at different ways to earn income, which has created opportunity for business and small business and micro enterprises. So organizations like Michigan Women Forward, who provide funding for startup businesses and those that have not received or had a business in the past that may not have as much access to collateral or may have had challenges with credit. It's an opportunity for us to continue to work with businesses that are women owned and to help those that are considering other options for themselves because they are looking at having to take care of their children or having to work online with the education system based on how it is currently. So they're trying to think about innovative ways to support their families. So it has created an opportunity for us to continue to work with those micro enterprises and move them forward. With that being said, we have to think critically about how to support them so that they can create sustainable businesses. So whether or not it is thinking about how to support them through our technical assistance programs and thinking about how to help them lay the foundation for their financials, lay the foundation for their strategy on the internet and reaching clients. We've been really thoughtful in terms of trying to do just that to make sure that women are continuing to earn and contribute to the economy in the ways that they have historically. Because what we have seen and what we have heard is that this particular pandemic could set women back 50 years if we don't continue to be proactive and help those that are looking at additional ways to earn income move themselves forward, which is what we focus on at Michigan Women Forward.
And if you have questions, please feel free to drop them in the chat room or the Q&A button will be opening up for questions in a couple of minutes. Regina or Ray, give you an opportunity to address the similar question. Regina, I see you've unmuted yourself. I'll give you the first opportunity.
I would like to add and definitely uplift everything that Alexis said, in particular to the woman entrepreneur. The one thing that I want to add that at Build Institute is a primary part of supporting the entrepreneur is the classes and support around self-efficacy and resilience. We find that particularly in Black communities and with women, even in Memphis, that with all the resources provided, there was something missing, and it had a lot to do with the emotional and mental well-being and self-care that's necessary to be effective in their day-to-day, but also to continue to do business. And business isn't as usual now. And so we have classes that support with that, what we like to say is the third leg of a stool, to help them with their mental health and wellness so that they can be effective in their personal life, but also in their business.
You introduced an interesting concept, but Ray, I'll come to you in a second. Self-care. I mean, we have to take care of ourselves right now. It's important that we do that no matter, I know business is important, but our health is certainly important. That's the only editorial comment I'll make this morning. But Ray, I'd like to come over to you to talk about from Detroit Development Fund's perspective. Unmute yourself, I think you're muted. I'd like to give you an opportunity to respond to that question as well as it relates to women entrepreneurship and the resources and help out there to provide the level of support they might be looking for.
I think both Alexis and Regina hit it on the head. We have a microloan fund called the Biz Fund. It does not compete with Michigan Women Forward because we'll do loans that they're not able to do. And if we find one they can do, we'll move it over to them. But what we've seen in that in the last 4 months are more startups from women-owned companies that just don't have any collateral or anything like that, and then they can't get a loan anyplace else. But I think the most important thing, and has been said, what we found is being able to pull these groups of people, women, together, particularly in the classes that Build has or the classes that Michigan Women Forward, so they can sit in a room together and talk about the issues and talk about what they're doing. So you're talking with other entrepreneurs. You're not just talking with, one of our lenders, and how are they dealing with it, and trying to build a support, which we try to do with our loan customers, so they can sit together and talk about what are they doing to help. I think that's an important factor in moving these small companies forward, so they don't think they're alone. They've got other people in the same space that they are. And we found that to be very successful. And as far as what Alexis said too, there are many people who can't start a business or don't want to, but there are organizations that we work with. A great example, Carla Walker Banks, who used to be with Goldman Sachs, now heads up Empower. And they train young and women, particularly in the IT business. And when they come through their job placement. So I think there are a lot of opportunities to help in this economy, but helping them all work together is important.
Good. And one final question, I'll give you a very 30 seconds to respond each. One is, how has the business environment changed over the last 14 months? And what are these implications for the future? Technology, remote, COVID restrictions going forward. I will start with you, Alexis, 30 seconds or less, so we can start answering questions. But how has the business environment changed over the last 14 months, and what do you expect for the future?
Yeah, I think one of the biggest changes in the business environment is the virtual environment. There is just a complete and total shift in terms of how we're reaching people. And as a result, we have to be innovative because there are just so many things that are virtual that are happening. So, there's almost like a log jam in terms of the type of information that's constantly coming at you. So we have to be thoughtful and innovative in our approach and how we're reaching individuals, whether or not it is an entrepreneur or Michigan Women Forward and trying to get our information out. I believe that that's one of the biggest changes. And then also with that, because we figured out how to work in a virtual environment, we're not touching each other and seeing each other in the same ways. So, one of the things that I just loved about what Regina said is that self-care. And when you don't have that same type of human interaction, you're missing something. And I think that we have to be really conscientious in the business community, in the business environment, to continue to maintain that relationship, because that relationship at times is what we have to stand on. And so it's extremely important to do that. I mean, Kala talked earlier about about banking relationships, and it is about those relationships. It is about being able to call on people when you need to, when you're having a difficult time. So we have to remember and think critically about how to continue to do that, regardless of whether or not we're in person.
I'm literally up against the clock. So Ray and Regina, because I want to open for Q&A. Any final comments based on what Alexis, anything you want to add to? Okay. What I'd like to do now is to invite Jeff Korzenik to join us back in the panel. Thank you, Jeff. Thank you for your presentation earlier. We're going to open up for questions for a few minutes here, and then we're going to wrap up and let you go. One of the things you know about me is I always start on time, and I always finish on time. I don't start late, and I don't run long. That's just how the lead group operates. Been doing that for years, my entire career. All right, so first question, we have waiting to hear back from Tamika. Tamika, anything?
Yep, I'm here. So okay. Give me 1 second. We do have one question. So if you want to get started with one, I'll go ahead and send you the other ones.
Yeah, absolutely. Jeff, I do got to ask you, in terms of the economy, great presentation. You know, some people may be wondering, is now a good time, economically, the recovery coming on? Is it a good time to start a business potentially in these challenging times?
So here's the history. Most successful startups start in the midst of downturns or in the early parts of recovery. So if history is any guide, this is a very good time to do it. Change is in the air. That creates new opportunities for those who are nimble enough to do that. And it also frees up some talent. So there's some very, very talented people out there who sadly lost their positions during the pandemic, but can bring those their personal resources, meaning their skills, their network, their problem-solving history, to the table. So it's a great time. Also, you've referenced the Black business community several times. I'd also like to add that there was, starting about 4 or 5 years ago, a transformation in this country in Black entrepreneurship. It had traditionally lagged some other ethnic groups, most notably the Latinos had kind of led entrepreneurship. And one of the most exciting developments, I thought, for the US economy was the rapid expansion of Black entrepreneurship that started around 2017. It has continued. I think this is a great opportunity for the community.
And Regina Ann Campbell, you're working with startups with Build Institute, pretty much, a lot of startups. What is your take on that question as it relates to, is it a good time to start a business? Are you getting a lot of inquiries, or people just kind of holding back? Regina Ann Campbell. Yeah, please.
Little trouble finding the mute.
There you go.
So definitely, I agree 100% with Jeffrey in that the timing to start a business is now. And we often see the uptick of new businesses during downturns, as he said. And so we are having a lot of people who are contacting Build, enrolling in the class, wait list for class, because people are starting businesses, and there's no better time now than to enter into this marketplace.
And Alexis, what are you saying from the Michigan Women Forward in that context of that question?
Absolutely. We are continuing to see entrepreneurs starting businesses. I think one of the things that we're just trying to make sure is we're thinking about putting capital and placing capital into them, is just making sure that the time is right for loan opportunities, and whether or not it needs to be another resource.
Okay. Ray, like to chime in?
Yeah, quickly. We are seeing the startup companies come now to us in the last 3 or 4 months, both in our Biz Fund and the Entrepreneur of Color Fund. I think it's a good time if you have the right resources, you understand your finances, your financial statements, your projections. I think it's a good time, but that's why we have the resources.
A question for the audience as well is, where would a small business go to analyze their current financial picture and receive advice for future direction? Where would a small business go to analyze their current financial picture and receive advice for future direction? Who would like to take that on?
I can take it. There's a couple places. So TechTown has resources available to support entrepreneurs that are considering looking at their business to fully understand. The other resource that I would suggest is a Small Business Development Center. The Small Business Development Center is an awesome resource through the SBA. All of us are paying through our taxpayer dollars, so please take full advantage of it. That's an amazing resource in order to understand your financials. And Michigan Women Forward is working through programming. We're piloting it right now, but stay tuned because we will have that resource available. If you're looking at just trying to figure out any kind of tax implications or tax issues that you may have had, Accounting Aid Society is also an excellent resource for helping you think through taxes or even getting your financial statements just set up.
Okay, I have a couple more questions for a couple more minutes. The question is, the SBA has just opened for applications for restaurants, bars, and food service operators with priority to women-owned companies. Do we have any idea how many Detroit businesses are applying for this opportunity? Who would like to take that on?
I'm not sure. It just opened this week, like literally Monday. So I don't have that information right now. I don't know if anybody else has heard from Detroit Economic Growth Corporation regarding that. I'm sure we could probably find out and get that information out later.
Why don't we do that? Why don't we, if we can find that information, get over to Tamika, and we'll make sure that that response is certainly forwarded. Next question is, which types of businesses? Oh, I'm sorry. Tamika's going to answer the question live. Tamika, please, briefly.
Oh, no, I'm not. That was by mistake.
I'm sorry. Okay. Next question is, which types of businesses are most likely to survive, and which ones are the most vulnerable right now?
Yeah, I'll take that. Oh, I'm sorry. Go ahead, Regina.
Oh, no, go ahead, Jeffrey. I'm gonna let you.
Yeah, I'll just answer that broadly. I think given our view of this disrupted economy, those that want to go back to just how business was before are the ones that are going to be most vulnerable. And this is going to require nimbleness. We don't yet know all the opportunities that are being created in this cycle we have in front of us. We have some clues about what that might be, and particularly relevant to Detroit. We've seen the auto industry, which feeds downstream throughout the Michigan economy, came back before public transit came back and is likely to keep growing as suburban people who move to the suburbs have greater demand for cars. We are going to have, as referenced in the earlier panel discussion, a reliance on online business in a way we haven't done before. So those are, hints, but I think good entrepreneurs will understand that this is a new economy that's being developed, and being nimble and resilient is really the key. Don't go back to how we were before. So a very broad brush, but it's a starting point.
And I will give Regina, you want to add on 30 seconds, and then I have to wrap up. But Regina?
I was just going to say the one thing that came out of this pandemic is that essential services, what that looks like changed, because we found that salons, restaurants, and other things around people's quality of life that they want to experience, people miss those things. And I think that those businesses will be the ones who will thrive and do well as long as they're willing to pivot and stay in the virtual digital space.
Ray and Alexis, 15 seconds each for final comments.
I agree with just what Regina said. I think retail has it'll both. They can be, it's going to be difficult, but if they do it right, they'll get back. And the one thing we always say here, what you need to grow business is the drive and the passion. And that's what you have to have. And if you don't have it, it's very tough. But most of our entrepreneurs have that drive and passion, and that gets them through.
Alexa, you get the final word in 15 seconds.
Sure. The businesses that I think will thrive are those that have good fiscal management practices, understand who their customers are, and have the right team in place.
We have many more questions that we ran out of time. We'll answer those questions to get back to you. But I want to personally thank Ray Waters and Regina Ann Campbell and Alexis Dishman and Jeff Korzenik for hanging around and joining us back. Outstanding panel discussion. You guys and ladies are the absolute best. I appreciate all that you're doing here in Detroit. Thank you very much. What I'd like to do is, in terms of wrapping up, and thank you for all the participants, let me just briefly give you an overview for next week as we wrap up. First of all, I hope you have enjoyed this opportunity today to hear from business experts as relates to your business, re-emerging from the abyss. And what we're going to do is to continue the conversation. May is National Small Business Month, and this is National Small Business Week. So May the 12th, next week, registration is now open. Registration is now open. We're going to continue with the theme, Navigating Change, the Journey to Success. And I'm so pleased to welcome a Detroit legend, a business legend, not across just from Detroit, but from across the country, Dr. William Picard. And he's going to be speaking and providing his perspective on the journey. I'm also pleased to welcome, we're going to have Ms. Pamela Dover and a recipient of the Comcast Rise program will be speaking as well. But Dr. William Picard, that's next Tuesday, May the 12th. And the event will be from 10 a.m. We start exactly at 10, and next week will be an hour. So we'll be from 10 a.m. to 11 a.m. I think we're dropping in the chat room the link right now if you want to register. This session sold out. We sold out 4 days ago. I would encourage you to register now. Again, there's the website is on the bottom of the screen. You can go to my website to register, or I think Tamika, I'm not sure, I think you dropped the link in the chat room to do that. All right, so don't forget, registration is open right now. We just opened it at the end of this session. Please go to leadgroupinnovation.com or the link that Tamika just dropped in and register. We're going to encourage you to do that. So next week will be May 12th. We're going to have a 1 hour session. May 19th, we'll have a 1 hour session. May 26th, we'll have breakout sessions are being sponsored by Build Institute, and Regina Ann Campbell and her organization will be sponsoring that. I thank you all for joining me today. What a wonderful event. I'm humbled, I'm honored to be able to bring this to you each and every single year. And I want to encourage you all to go out and make it a great day, make it a great week. And this session has been recorded. Again, it will be downloaded at Detroit Public Television's YouTube station later today. It will also be downloaded and dropped in on the Lead Group's website as well, and maybe our business partners. Have a great day, everyone. Thank you very much.
Thanks,
and a survey will be going out this afternoon at 2 o'clock. A survey will be going out at 2 o'clock this afternoon. We encourage you to fill that out and return it. Have a great day. Thank you all.